Sir, I got two small questions. First question is that which are the debt schemes which can give about 8.5% return in the current market situation for next 3 to 4 years?
Okay.
Second question is that how are the debt mutual fund schemes more tax efficient as compared to fixed deposit in the bank?
Yes, Dhirendra, what would you like to say?
I think, short-term funds are likely to provide you returns in range of that. But, unlike mutual funds do not provide you guaranteed return, also indicative return. But I'm hopeful that, around 8% return is possible from short-term funds. And who knows, there could be some, there are talks or expectations of an interest rate cut that can also enhance the return in the short run. The way mutual debt funds are efficient is that when you when you make a deposit, all your interest is taxed. It is added to your income and you are taxed at the marginal rate. So if you're in the highest tax bracket, your interest income will be taxed at the highest income bracket. If you're in the middle income bracket, or if you're in the no income bracket and interest income is your only thing and your interest income is below the threshold, so it will also not be taxable in that sense. As compared to that, the mutual fund, the debt mutual fund, if you hold it investment up to 3 years, there is no difference. All the return that you derive will be added to your income. But there is a difference. The difference is that till you realize the gains of the mutual fund, it is not subject to tax. In case of interest, all your annual interest accrual is considered to be your income. So even if you don't realize the interest, it is your income and you are liable for the taxes. As compared to that, till you realize, so you can plan it. If you defer your redemption for 2 years, you will not be liable for the taxes. So the compounding works. All the interest, all the return that is accumulating, that keeps on earning more.
Right.
Second is that if you hold your investment for 3 years and more, then it turns into from income to capital gains. It is considered as a capital asset for holding of 3 years and more. So it will be indexed. So your return less inflation and the residual gains will be taxed. So that turns out to be far more tax efficient because on that you pay 20% tax only. So gains minus inflation, residual gains, 20% tax is far lower than the highest tax bracket, even the middle tax bracket.